Hi, welcome to the Market Alert for Friday, the 16th of August 2019. Bond yields crashed to record lows. Stocks barely bounce after bloodbath. And another exciting and interesting day yesterday. So let's start off by looking at the Dow. And we'll start with the daily chart. The market gap lower yesterday morning that we saw and moved and closed back at and just above the 200 bar moving average. No surprise to anyone who follows the Market Alert. This 200 bar moving average is just like a magnet, as we've seen before. The question is, how far can stocks go to the upside? So what I would be inclined to do here is to go to the recent high, to yesterday's low, and draw this in. This would be the upside resistance for me. This is going to be the first part of where I would expect the market to fail if it does move higher. But if it doesn't move higher, then it's going to retest this 76%, this low, and this low. And that's all going to be determined on one or two factors today. There is no economic news to talk about, so the market's going to have to make its own direction, and no doubt assisted by Trump as well. It is a Friday. They like the market to finish on a high. They particularly like a bloodbath on a Friday because it causes a bit of stress over the weekend, shall we say. So don't be surprised if the market moves towards the upside today. That's what it's doing at the moment. And yesterday we can see the market. So this is the pre-market session moving lower. Eventually it found some support and then moved higher. In the pre-market session, they ramped the market back up to the 200 bar moving average. You see prices sitting on it here. The market then oscillated but came back, as you'll see here in the main session. There was a bit of a tussle going on for quite some time, but then eventually the market breaking but not holding. And you can see also from the left here to here about 76% retracement for this market. In fact, let me just mark this one up and have a look. Might actually be a bit more, just on the 76 there. Let me just redo that and take out the extend right and do that again. So from here to here, you'll see the market staying within this area for the 76% level. And also, if we were to mark this up off here, off the recent high in the pre-market session to here, you will be at the 62% there. So some resistance around here, and then the market tries to bounce a bit. But where does it bounce to? We go from this high down to this low, bang to the 76 and 62% area there. So then there was a bit of a sell-off as we came back through the 200 bar moving average. We see 3 consecutive selling bars, and then a bit of support, all high volume. Plunge protection team came in, and the rest, they say, is history. And we see prices moving back to the upside before the close. And overnight, prices, once they were back above the 200 bar moving average, have remained there. So you will get these bounces after you get down days and volatility. And at the moment, you can see driving the market back to the upside there. So this is the main thing here, to keep your eye on the bigger picture of where we are. The upside has the most potential at the moment because we've seen the market down for the last few days. They want the market back on these highs. There's no doubts about that. Trump's even said it himself, because he's not going to get elected if the US goes into recession. It's going to be difficult not to, given the backdrop of other events as well. We have to look at the 10-year yield yesterday, this making a new low yesterday. So the drama's not over by any means. In the background, you just get the odd day of reprieve. The longer term, you can see, this is a chart that I've constructed that shows you all of the recessions following the inversion. It is the most accurate predictor of recessions, and you can see this here. Of course, before this, we've got to have the shoot back to the upside of the yield before we get into the recessionary phase, but at the moment we're certainly seeing the potential for a recession for next year. So keep an eye on that. Implied volatility as well yesterday, pulling back a bit, which you'd expect because the market was up by the end of the close. Only a smidge really, 1927, 2087 is the high. But again, you expect this to breathe as you see here until you get a climatic action. And the thing that could do that, of course, is Deutsche Bank. As we look at the chart, we are getting close to Charles Nenner's $6.40. Wouldn't be surprised if we see this today. So this will be interesting to see what happens here. Like I say, I'm not pinning any sort of hope on this, but it's just going to be interesting to see the fact that he made the statement back in June, and now in August we are heading to this level. Once again, price is breaking below the 200 bar moving average. They've accelerated to the downside. This is not being reported in the mainstream, but if anything happens with regards to closing below this 640 level, then we could see a bit of carnage. So keep an eye on this one if you can during the day as well. Always keep these things in the back of your mind because they're all inextricably linked. And again, the yield there inverted across the curve now as well for yesterday. I'll just double check this because I haven't refreshed this. Let's just have a quick look. Yeah, you can see that it's without doing anything else from here. Let me just see if I can do this. Yeah, more or less. I think the 30-year is the only one that hasn't crossed the 3-month, but all the others have. I mean, I haven't drawn that. I don't think there's a way of actually holding that horizontal with the drawing tools in the screen recording software. But yeah, you get the idea there. Unless, let me just try something here. See if I click on this one and see if this will... Yeah, I might be able to do this then. Just 1 second. Let's just remove this. Yeah, so yeah, the 30-year, not quite yet below the 3-month, or the 3-month above the 30-year. But certainly a precursor, and this setting up in the background. And again, this is a bit of forward planning with the fundamentals, which again you should always keep an eye on, because that's going to determine what you do in these other markets, and in particular the Dow, because obviously the bonds and the stocks have decoupled, as it were. Normally they would go in the same direction, and now they're not. And the pound for yesterday, it's finding a bit of a bounce actually, so a bit of dollar weakness around. And yesterday you can see this as well, the market closing back above the 200 bar with professional buying. Bit of resistance to begin with, but then made its way to the upside there. And then finally in Bitcoin, the weakness continues. The market managing to come back above the 76% retracement yesterday, but overnight this market moving lower, as you can see in the 4-hour there, back below this 200 bar moving average. And again, if you were to mark up from the high here just under the 200 bar moving average down to here, will take you to 76% here. And finally in the 15-minute yesterday, we had a bit of volume down the bottom here driving the market to the upside, a pullback, and then sort of sideways to higher, and eventually we get to the 200 bar moving average. The market sits on this overnight, so you see how we broke through here, very high volume, but prices coming off the highs. Some weakness around, the market traded sideways, pulls back to the 200 bar moving average, and guess what we get? So I just go back to the markup tool, we go from this high to this low, and this takes you straight back to 76%. And then we see the market sell off on the overnight. So at the moment, a bit of weakness around. This is climatic volume, so expect a bit of a bounce from here before any potential further down move. Unless, of course, the market finds support in this area, then you would expect to see something like this. So keep an eye on the volume. Okay, that will do it for this one. I think that's it. Been through everything else. So yeah, keep an eye definitely on Deutsche Bank today. If any carnage starts happening in the Dow, then go and find some news on Deutsche Bank and see if Charles Nenner's prediction is correct. All of the yields should have a better day today if the market does move to the upside, and the implied volatility likely to pull back a bit more as well. But just to finish off with this, the Dow remains short both. Again, the Dow below the average, the implied above. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.